All right, what is up, traders? What's up, tycoons? Today we have to talk about one of the most important intermarket relationships, especially if you're monitoring biotech. Now, we did call out XBI very nicely. You can see we had the inverse bump and run pattern. We also had an inverse head and shoulders firing up, taking us up to our overhead supply zone. We'll break down all of that in today's video if you're not familiar with those patterns. But the relationship you need to pay attention to is going to be biotech and treasury yields, okay? So you want to pay lots of attention to TNX. It's no coincidence that we've seen a massive downtrend in TNX and seeing a nice massive uptrend here in XBI here recently. We're going to break down this relationship even more and show you guys, basically how these two have an inverse relationship via a couple graphs, okay? And as always, though, the content provided on this channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. So please be sure to read through the disclaimer. If you're new to the channel, I started a completely free newsletter for you guys called Investment Intelligence, giving out free valuable finance content, free trade ideas, and free trading content. You can get those emails straight to your inbox. And these are what the trade ideas will look like, right? Highlighting the chart conditions, going over the chart patterns that we see, showing you the chart, and giving you guys some targets to the downside or to the upside, depending on if it's a long or short trade idea. All right. And I recently just wrote about biotech, a week or two ago, and we've continued to see this rally here in biotech. So if you're fans of free valuable content and free trade ideas, you're really going to want to sign up for that newsletter, completely free to get those emails straight to your inbox. Otherwise, you can actually join the Investment Intelligence Discord, guys. It's only $10 a month, less than a cup of coffee a week. And that's where you get access to not just one or two free trade ideas a week from the newsletter, but where you actually get access to all of my different trade ideas, all of my different analysis, custom scripts, custom indicators, and other resources as well. Okay, now let's go ahead and get into the video. And the first thing we want to talk about is the inverse relationship between the treasury yields and biotech. So the first way to really show and visualize the inverse relationship for you all is we have an inverse TNX here. So this means that an inverse 10-year treasury yield versus the XBI. Now, what we are seeing here is that the inverse 10-year treasury yield and the XBI typically move together. Now, there's a shaded area here where there are going to be discrepancies, right? This is not something that's always going to be 100% correlated, but in general, as you can see, when the inverse 10-year treasury yield is going down, XBI is also going down. So keep in mind, what that means is that the actual 10-year treasury yield is going up while XBI is going down. And we can see here the inverse 10-year treasury yield as well as XBI have been on a tremendous rally, right? And so if that's a little bit too complicated for you guys, we can just show you them to you right here. We have the TNX up top, and then we've got XBI here on the bottom. Okay, and you can see here, basically as XBI is going down, TNX is going up. This means that the 10-year treasury yield is going up. And then here we can see the 10-year treasury yield is going down. And what do we see? Well, we see the XBI actually going up at this point. So this is what I mean by they have a very inverse relationship. Okay, and this chart right here, this is actually available to Discord members. This is one of those great resources. Thinkorswim has a flexible grid option, and you guys can actually share flexible grids with other people. So there's about 35 flexible grids that are available to all of the Discord members. This is just one simple one, but there's really, really great ones such as this one inside of the Discord. And again, all the Discord members get access to those. And you can really see the inverse relationship. Now, I went ahead and went to ChatGPT to try to explain it to you guys, in a really good way. And ChatGPT is just fun to use. Now, I already know the inverse relationship between these, but ChatGPT does a really good job of explaining why. And it talks about how in the financial markets, treasury yields and biotech stocks often share a key relationship through the lens of borrowing costs. That's the important there, right? That's the important part there. Now, generally, biotech companies known for their heavy reliance on research and development, they tend to borrow funds to finance their long-term and costly projects. When treasury yields rise, indicating higher borrowing costs, it can put pressure on the financials of these biotech firms. Remember, lots of times these biotech firms, they are profitless companies that are looking to spend lots of money on R&D, research and development, to come up with a successful project, whether it's a new drug, technology, or something like that, that ultimately makes the company profitable in the future, right? So when we show the charts, all right, that show the inverted TNX representing treasury yields against the XBI, all right, which is an ETF that tracks biotech stocks, typically these two move inversely as lower yields can mean lower borrowing costs, right? Benefiting biotech stocks. So as treasury yields come down, it makes it easier for these biotech companies to go out and borrow money, okay, and raise money so they can further advance their research and development. Now, it also talks about how in the shaded area of the chart, how those two are moving closely together, suggesting a departure from the usual relationship. Again, guys, these things aren't going to always be 100%, correlated all of the time, but you need to get the overall grasp, right? And the overall concept behind things. And that will really help you understand the movements in biotech, right? A lot of people in biotech don't really seem to understand this very simple concept. So I made a dedicated video to this. Now, this could be used to, this all could be due to a variety of factors such as market sentiment, regulatory news impacting biotechs, or broader economic shifts. Understanding this relationship is crucial for investors who could see their biotech holdings impacted by changes in interest rates. So when we look back on 2022 and we go from basically a zero interest rate policy, right, the ZIRP, and then we go to the most rapid acceleration of Fed funds rate in history so far, we can understand now why biotech was so negatively impacted. Now, if the Fed was actually to start cutting rates, which I'm not saying they are, but the market at the time of this recording has started to price in rate cuts as early as March of next year. This would make borrowing potentially easier, right? And lower borrowing costs for biotech companies, which therefore could potentially help them in funding their research and development for these new costly projects, and ultimately may increase their odds of having success with these costly projects. And that may cause investors to try to flood into the biotech sector. Okay. So now that you've understood that, we can come here and now break down the XBI chart and understand, well, hey, this wasn't just out of nowhere, right? Of course, what I like to always say is price action precedes news. And so when we have, this time here, basically it's foreshadowing that, hey, treasury yields look like they're going to continue going higher. That's a negative environment for biotech. You have to understand the narratives and then understand when narratives shift, why they're shifting and why they could potentially shift in the future. And so, we're understanding here things are not looking good. It looks like 10-year treasury yields could continue going higher. That may result in us coming down and hitting our bearish price target as we did for XBI. Now that there's been a change in the narrative for treasury yields, it's no coincidence that we're seeing biotech rally, right? It's not really just coming out of nowhere. But when we look at price action, there were two patterns here, right? Previously, we had a head and shoulders here, all right? And previously, we had a head and shoulders here. Most recently, we have an inverse bump and run, which is my favorite chart pattern of 2023. It's very, very simple, but just not many people know about it. So what you do is you spot a prevailing trend, right? And in this case, it's a downtrend. And then we get this aggressive bump down in the price, right? Indicated by this trend line here. And the run, okay, so now we have the inverse bump and run is when you break this initial trend line, and in a perfect world scenario, you're actually going to come up and break the second trend line as well. And so when we see that happening, right, we get the initial breakout, and then we come down and retest this trend line here. And then we come up again and we actually form an inverse head and shoulders with the left shoulder ahead and then a right shoulder here after the pullback of the retest. And what do? We take off just like a rocket. Now we're at a critical point right now because when you factor in simple supply and demand, aka support and resistance, you can see that over here was support, over here was support, over here was support, right? And then what did we do? We came down, retested that, flipped it to resistance, pushed lower. And then once we came up here, we consolidated this old resistance and flipped it to demand and pushed higher. So now we're doing the same exact thing where we had old demand, old support, old demand, old support. And then here we flipped it to resistance for us to continue pushing higher in biotech and come up to the 86.78 price target. We need to consolidate in this area and push higher. Okay. But we know that this last time we tested it, it was an area of resistance. So we know that this is now overhead supply, and we know that potentially we could push lower here. So you want to be cautious trying to long in this environment. If you're trying to long in this zone, you want to have a stop loss below the demand zone, which would be roughly around 77.50. Okay, that's an area for a stop loss. And from a risk to reward standpoint at 79.32, you're basically risking $2 for a potential to make about $7. So that is about a 3-to-1 risk to reward ratio. And that is a very good risk to reward ratio, meaning that even if you were to fail this trade, that is okay. If you're taking 3-to-1 risk to reward ratios, you can lose 2 out of 3 of those trades. But if you win only 1, you're still going to be positive and make a net gain on the 3 total trades. So keep that in mind. Now, that we really understand the relationship between biotech and treasury yields, if we look at treasury yields, look what happened here. TNX actually came down to our price target here, which is actually going to be the move down that we were looking for. It came down, found support, and it started to rally higher. So if we understand that these have an inverse relationship and treasury yields are actually starting to go up, it makes sense that we're now seeing a red day with XBI down about 1.5%. Meanwhile, the 10-year treasury yield is up about 2.76%. So once you really start to understand these dynamics, things will become a lot clearer and you won't be caught so blindsided, right? You won't really just buy into something. Let's say you're buying into XBI here and you're not understanding the environment with treasury yields and it just goes lower, 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 and you're just absolutely bleeding. And then you sell down here and then all of a sudden it starts to rally. And meanwhile, the TNX came up and hit resistance at the top of its channel, started to fall, and you sold XBI when we were up here at resistance on the TNX. Okay, so hopefully you guys learned something new from this video. If you did, smash that like button, subscribe to the channel. Don't forget that all of these charts right here, these are available to the Discord members. These are some of the chart layouts that I share with everyone. There's really, really amazing chart layouts in there. You can also sign up for the my Ko-Fi page right here and click on the commissions tab. I do one-on-one coaching and personal sessions all the time. You can book a 30-minute or 1-hour session directly through that Ko-Fi page. You can also join the Discord, the Investment Intelligence Discord, where you get access to all of the different trade ideas, those flexible grids, those layouts, many other resources, as well as, the custom scripts and indicators that I have for you all. Or, for free, you can just sign up for the Investment Intelligence newsletter, where you get free valuable content, free trade ideas every single week directly to your inbox.